Hey everybody, welcome back to the channel. We are back in another episode of the Daily Recap. And folks, we've got a ton of things to discuss today. The number one thing being that Tesla Robotaxi, the first Robotaxi ever. We got an appearance of it in Austin, Texas, in the United States. We have an official date by Elon Musk on when Tesla Robotaxi is going to launch. So we'll be talking about that, implications of what that means for the stock, for the broader market. China updates, really important updates we got literally 2 hours ago by Secretary Besant, Lutnick, and Trade Representative Greer. So we'll be talking about the implications of those potential negotiations that now seem like they're ready to be in place. It's like we got an announcement of an announcement of the announcement of the plan and the framework of the official announcement. But regardless, markets seem to like it. And then we have some macro stuff to discuss in terms of different data. CPI is coming up tomorrow. We'll do a little bit of preview of CPI. We have some Google news today. Lots to talk about. Lots to get into. Thank you, everybody, for being here. Let's get into it. All right, so let's start off with the Tesla news today. Obviously, the most bullish news that we had throughout the entire day. Tesla stock right here did get up about 5%, 325. Currently, right now, we're at 324, hit 328 at one point after hours. Why did it happen? So yesterday, we talked about the Elon-Trump relationship starting to become better than what it was before. And the media kind of realizing, or at least the media not harping on the fact that Elon and Trump had that big falling out. Elon deleted all of his tweets. All that stuff was very important. Today, we had Robotaxis. So what you're looking at right now is a video posted by someone in Texas, Austin, Texas, where we had the first official announce of a Robotaxi that, or we had the first official video of what a Robotaxi looks like. These are two Teslas that are driving. They do not have, they don't have anyone in the car. They are unsupervised FSD, and they are being driven right now inside of Austin, Texas. Now, the really interesting thing about this is that there's probably some geofencing. There's probably some humans that are, to an extent, making sure that everything's okay. There's probably a car that's monitoring the other car. But the point is, people have waited a decade for this to happen. And today, it's actually happening. Then, about 20 minutes ago, we got an update from Elon. He said tentatively June 22nd will be the first actual unsupervised FSD drive. He said, we are being super paranoid about safety, so the date could shift. He then says, first Tesla that drives itself from the factory end of line all the way to a customer house is June 28th. That was supposed to be June 12th, delayed down to June 28th. If you've been in the Tesla ecosystem or covered the stock, you know that usually the timelines tend to be a bit more elongated because it's Elon Musk and we tend to not be on time, but nonetheless is very bullish, right? Because by the end of June, this stock is going to have, or at least this company is going to have the first Robotaxi out there into the world. The implications of the stock would be massive. Now, look, Q2 numbers are not going to be good. You know, I was talking to Farzad today on the channel as well. I will link the market close in the description, and there's the chapter where I talked just with Farzad about Tesla, and he really broke down what he thinks the implication of this will be like. And he admitted like Q2 is going to suck, and we knew Q1 sucked, Q2 sucked. Q2 is going to suck, etc. However, we're going to talk about some macro stuff. If markets are going to all-time highs, if we're going to get trade deals done, if we're going to get good CPI reports and inflation is going to come down, this market might be able to overlook bad earnings for Tesla because at the end of the day, the growth prospects of Tesla are something that are so unbelievably exponential that markets might just not care. I mean, quite frankly, markets might not just care. Maybe there's going to be a dip on Q2 if it's like a really crappy earnings, but I don't think that necessarily means that it has to go back below 200 simply because Trump and Elon got into a public fight. And, you know, quite frankly, I was thinking about it on Sunday. I was just like, this is a story is going to die out. I mean, the Palantir story about them being an evil company is getting more attention than Trump and Elon. And so this is not a story that has too many legs. Trump kind of, you know, made it sure it died down by not really escalating it. He very graciously said, I wish Elon very well. And so if Robotaxi does good and we get a meaningful launch, which is going to take 18 months to hit the bottom line, the stock might have dips along the way, which I think is very reasonable to expect, but it also doesn't have to. And from that perspective, I think that would be very, very bullish for Tesla. Now, we did get two analyst reports from Tesla this morning. Wells Fargo says 120, sell it. Wells Fargo has not been the biggest fan of Tesla for a very long time. And their exact wording was, despite Tesla's momentum, they see 60% downside from current prices over the next 12 months, with Q2 deliveries expected to be down over 20% year over year. Morgan Stanley said the opposite. We said, hey, it's our top pick, $410 price target. They have an edge in physical AI, AVs, humanoids, energy, robotics, compute. It's unequal to anything else. We struggle to think of any company as well positioned as Tesla in the age of AI. Two counter perspectives. Obviously, I'm a bit biased here. I would agree more with Morgan Stanley than Wells Fargo. I think 120 is just discounting way too much for Tesla. I could see it dipping. I cannot see it deteriorating 2/3 of its value. I just don't see that happening. By the way, retail, $680 million last week was flown into TSLL, which is the 2x leveraged Tesla ETF. So you've got retail investors to the tune of over $500 million that bought the Trump Elon Twitter beef, if you want to call it that, dip on Thursday by leveraging up to get 2x the exposure through this leveraged fund via TSLL, which now has $5.5 billion under management. I am starting to believe that this cult that believes in Tesla truly sees the future that's happening in front of us right now in the age of physical AI. You've got Apple introducing liquid glass emojis and different ways to make our home screen look a little cooler, which in reality looks kind of stupid. And you got Tesla building self-driving cars. I mean, it is clear which company is building in the age of AI. The other company has way better earnings than a Tesla. Most companies have way better earnings than a Tesla, but people bet on the future. And if the future is going to have better earnings and that's going to catch up to Tesla, I can't imagine what happens when Tesla gets back to becoming a growth stock if it's able to maintain these multiples while they're not growing. So from that perspective, very bullish. Robotaxi day looks like it's coming up, and the first unsupervised FSG drive did happen today, hopefully happening with an actual customer over the next couple weeks. Okay, next up is macro. So one of the reasons that the futures are green is because we got some updates in the context of the macro. Trade negotiations are officially finished in terms of at least the framework of what the negotiations look like between Lutnick, Greer, Besant, and China. So Lutnick said three things. Number one, the framework has been achieved to implement the Geneva Consensus if Trump approves. The Geneva Consensus was where Besant and Greer went to Switzerland to negotiate with Chinese officials. That framework is now in place in principle, and Trump has to approve it, and then it's good to go. That's based on what Secretary Lutnick said today. Number two, Trump and Xi getting on the phone call helped to get the deal done, so that he also confirmed, hey, there's a really good shot this deal got done because Trump and Xi actually got on the phone. And then he said the rare earth metals and magnets issue will be resolved. So this is the big thing that the United States has wanted, rare earth minerals, and maybe we're going to have to give up some NVIDIA concessions, aka will allow NVIDIA to sell their chips if we get rare earth minerals. That would be super bullish NVIDIA. Maybe we get it, maybe we don't. We'll get more details, but nonetheless, the talks are going really well. He also then added that China talks could go into Wednesday if need be. We don't know if they'll be talking tomorrow, but we'll see tomorrow. And then he said talks are going really well, and we have much faith that we will be able to reach a consensus. So, look, I know it's kind of this deal of a deal, but eventually there's going to have to be a deal in place. And I don't know when that's going to take place. I don't know how it's going to happen, but from what Lutnick is telling us right now, it looks like they have the framework of what this deal would look like. We have the Japanese prime minister that is visiting the United States from June 13th to June 18th, and Canada. That was announced last night. So maybe a Japanese deal is coming after a China deal. And then you got India and South Korea. India deal seems to be very close, according to a lot of different sources. We haven't been able to see the trigger get pulled on that, but if that ends up happening, that would be bullish. And then today we got another announcement. Mexico and the United States are nearing a deal that would reduce the Mexican tariffs on steel, or the United States tariffs on steel into Mexico by over 50%, which would also be incredibly bullish because that would decrease the average tariff rate in general across the board if we were able to decrease those tariff rates, which would be good for inflation, which would be good for our good friend Mr. Powell to hopefully end up cutting rates. Speaking of Powell, CPI tomorrow. Projections for CPI. I will be live at 8:20 a.m. Eastern Standard. I usually start at 8:45. Tomorrow we will be up early because 8:30 is when the announcement comes in. So we'll be live 10 minutes before it comes through. The market is expecting 2.5%. Last time we got 2.3%. I would not be surprised if we get 2.5. If we get anything below that, that would be awesome. Probably will have certain types of elements of inflation, whether it's housing, shelter, oil and gas, auto insurance, etc., airline fares that might be a little sticky going into the month of May. We did have a lot of tariff volatility. This is the first inflation print we're getting in the midst of the tariff, so it would not surprise me if we see an increase. But we're not getting a June cut. There's a 99% chance we're not getting a June cut as per the CME probabilities for the FOMC meeting. So we're not going to get the June cut anyway. July is like a 20% chance. We're probably not going to get the July cut. I think it's going to be a repeat of 2024 where we had to wait until September to get that first cut. But then we got it. And when we got it in September, we ended up having a pretty good Santa Claus rally. If we can get enough trade deals where tariff rates universally go down, right now they're at 14%, they were at 24%. In the beginning of the year, they were at 2.4%. If that 14 can get down to like 10, maybe 7, that would be bullish for inflation expectations. CPI naturally coming down will be bullish for inflation expectations. The labor market's been very healthy, which stops us from getting a rate cut, but still the labor market needs to be healthy for earnings growth to be strong, which is really good for the broader stock market. And then ultimately, if we can get any level of pro-growth business policies from the Trump administration and the big, beautiful bill, that should also be good for the broader economy if we are seeing inflation come down. By the way, AI, we talked about it yesterday on the show, all these AI startups that are hitting hundreds of millions of dollars of revenue. We have a big update with Meta AI we'll talk about. That is deflationary, folks. That is, hey, technology is commoditizing a lot of the work we used to have to pay a lot of money for. A perfect example, if you want to pay someone to make short clips of your videos, you would have to pay them, I don't know, $50 for every 5 videos they make. They would spend an hour, do all the editing, yada, yada. Now you have AI tools where you plug in your video. It automatically generates the best clips and highlights of that video, turns it into a TikTok or a YouTube short. And you can do that for $100 a year instead of $50 an hour to a software provider. And then you can post all these videos and you become more productive. These platforms get all this content, which means they can sell more ads against it. And then the software providers get $100 a year from millions of people. That is replacing the video editor that used to charge you $50 for every 5 videos in an hour. And so that level of basic automation and commoditization that AI has created in a relatively simple example is going to be expanded throughout the entire world across enterprise workflows, government organizations, and then obviously individual people and their own productivity, aka the people that use ChatGPT all day to become more productive as well. I don't think we're ready to see the deflationary impacts of that. And I don't think Powell or anyone at the Fed understands what that means for the broader economy. We might have a deflation problem more than we have an inflation problem 5 years from now, which would be super bullish, all the AI names, because that means their products are actually working. But it would also mean, hey, like, we're going to have to lower interest rates. And if we lower interest rates over the next 5 years to, I don't want to get ahead of myself and say we get anywhere near 0%, but like, let's say we get to at least 2%. Right now we're at 4.5%. Growth stocks are going to love it. And this economy is going to boom like we've never seen. So I think there's a lot of bullish momentum overall in terms of that ecosystem, that narrative from a macro perspective. That's how I'm, I guess, like philosophically thinking of it. I would love to know your thoughts in the comments. Obviously, tons of bear cases could put a wedge in how I'm trying to sort of conceptualize it. But in general, it really does seem like one of the best times to be an investor. And retail has bought all the dips. I will continue to buy the dips. I think most of us understand that this is a market you want to be long and strong in. And as long as things go according to plan, this could be one of the most epic bull markets ever. All right, next up is Meta. So Meta took a $15 billion stake today in a company called Scale AI. So Scale AI is a data labeling startup, and Meta invested $15 billion for a 49% stake. It kind of reminds me of Microsoft taking a 50% stake in ChatGPT, and they invested like $15 billion. Obviously, ChatGPT, OpenAI, a much bigger company than Scale AI. But it does look like Zucks is ready to invest, and he's not slowing down when it comes to the trajectory of why he wants to invest. Here's a video right here explaining why he's doing this investment.
Hey, so a source familiar with the deal confirms to me that Meta paid nearly $15 billion for a 49% stake in the startup. I also got some color around incentives. The source says that this is more about Scale AI founder Alexander Wang and his AI network, less about the data labeling part of the business. Now, Wang is just 28 years old, seen as a darling himself in the world of AI. He built critical infrastructure early on, and he has ties to both Silicon Valley and Washington. Early backers include VCs like Founders Fund and Accel. Scale has worked with OpenAI and Meta, other model developers, and it secured Pentagon contracts early, positioning itself as a key player in the government's AI strategy. Meta, by contrast here, really seen as falling behind in the AI race. So the Scale AI deal seen as a way perhaps for Zuckerberg to get more credibility as he tries to turn around their own efforts, especially if he can bring Alexander Wang into the company. Now, the company, Meta, has faced key talent departures, including top researchers defecting to startups. It's also been plagued by delays. And unlike a Microsoft or Google, Meta, of course, doesn't have that enterprise channel or cloud platform to really monetize AI, even though it is spending a much higher in terms of CapEx to revenue percentage-wise. Now, the Scale AI stake, that gives Zuckerberg a new entry point and a tighter tie to infrastructure that Washington, Silicon Valley, and the AI startup ecosystem are increasingly depending on. Kelly, the information reports that the deal will value Scale at $28 billion. That's double its last valuation a year ago. And on that note, you said there was a lot of AI news going on. It's true. Another Disruptor 50 company, Glean, I was reporting this morning, just raised a round valuing it at more than $7 billion, up 50% from about 9 months ago.
So as we can see, there is a level of infrastructure investment that Meta wants to do in regards to AI, and it's giving startups that did not have traditionally liquidity or access to this type of liquidity. Scale's been able to raise a lot of money, but Meta taking a 49% stake. I mean, the reason they're not buying them out is probably because of antitrust, and so instead of taking the company under, they'd rather just take a controlling stake. But it means that These big tech giants are realizing they need to continue to consolidate their power. They need to continue to invest in AI. Meta's already doing 72 billion of capex related to AI. And now this is another 15 billion for an AI company that's probably going to propel their interest in regards to labeling user data to be able to train their models in an even more effective way, which is basically what Scale AI does. It everywhere you look, dude. And again, this is why I keep saying it's the most exciting time to be an investor. We are seeing more and more money enter this ecosystem, more and more capex enter this ecosystem. This is why I'm so long in Nvidia, and it's like my number one Max 7. It is very hard to deny the level of investment and resources being allocated to artificial intelligence. And it probably makes sense that this is going to be one of the things that not only propels Meta to get to a higher level, Meta breaking over 700 today, but the entire ecosystem to benefit from what Meta is able to do. For example, open source even more of their models based on all this labeling of data that they can now use with Scale AI, and that just helps the entire ecosystem. So very bullish Meta, very bullish Max 7, obviously very bullish Scale AI, and overall ecosystem continues to compound. Okay, next update is on Google. So we did get a little bit of a Google run today to about 181, which was awesome to see. I do have Google calls, so I'm very happy for Google to, you know, go up and do well. The problem here is Google fell intraday, fell to like 174, came back to 177, so it's not even that big of a deal. But the reason it fell was a really interesting headline. So the headline was Google is offering buyouts to employees in search and ads unit. Well, that's the only detail we have from it. And my implication of this is, okay, so Google's being punished in terms of its comparison to a non-AI company based on the multiple that it's getting because they're so reliant on search, and search is dying because of AI answer engines versus search engine optimization, etc. Okay, cool. Now they're offering employees a buyout in the search and ads unit. And my interpretation of that is, hey, either we don't need your job anymore, we don't need to focus on your job anymore, you're being replaced by AI, or we're focusing on AI versus SEO, not entirely, but to an extent. And so they're offering employees a buyout. And then the stock fell. And it was so weird to me because I was like, why is the stock falling when the market is upset that Google is so focused on what is 20th century technology with pay-per-click advertising and 10 blue links, and they want them to embrace the future. And now this headline is Google saying, hey, we're going to get rid of some employees because we're not going to allocate as many resources to search and ads. We're going to move on from that. And the market was like, well, we don't like that. I think the market is just being kind of stupid about this when it comes to Google. I continue to believe Google is incredibly undervalued. I do think they have a headwind around search revenue growth and what it means for their bottom line. But I also think they have the ability to turn that around. It's just we haven't had evidence of that yet in terms of the numbers. The numbers have still been primarily rooted in search as their main cash cow. Now, Google Cloud is growing, which is incredible. By the way, OpenAI tapped into GCP, Google Cloud, to be able to get more compute. So that deal was announced this morning, which is very bullish for Google. That's also probably why it jumped to 180. But Google Cloud is still a small part of their overall business. The point is the business is diversified, and the headwind on the business is that the biggest part of the business might start being something that's not as relevant anymore. But I think Google has the ability to turn that around by focusing on generative AI, AI overviews, Gemini, et cetera, and still be able to monetize that part of the tech stack versus search advertising. Because all those advertisers can inevitably get into the Gemini ecosystem and the AI overview ecosystem. It's just a question of when does Google make that real switch to get the world to realize that this is where things are going. Because this is where things are going. We see this every day. People are using Google less and less and less. I know I use Google, but I definitely have stopped completely clicking on links in Google. I just use the generative AI overview. They just don't make money when I do that. Once they start making money, I think this is game over and things start really changing in terms of the Google narrative. So congrats to everyone who's bought the dip on Google, doing very well. I think 200 by the end of the year is not crazy for the stock. It should be anywhere near 215 to 220 right now. Fair value. If you could put a basic 20 to 22 multiple on it in terms of forward 2026 earnings, right now this trend at, I think, 17, 18. And I think it makes a lot of sense what they're doing in regards to moving on from search and ads, even though they're not fully moving on, but they're getting to the point where they recognize it's important to move on. And the market shouldn't punish them for that. So I thought it was kind of weird that the market dipped them to 174, but then it bounced back up to 178. I think Google, if it can hold above 180, 200, if we have a good Q2 that Sundar is able to shift the narrative from, because search growth will be down again year over year. We know that's happening. If he can shift the narrative to, hey, look at what else we're doing to hedge against that, I think Google starts to do very well. Okay, last couple headlines for the day, and then we will be done. Top 20 stocks that were traded in the options market today. Tesla, Nvidia, Apple, Intel, Google, Palantir, Ibit, AMD, Amazon, CoreWeave, Robinhood, MicroStrategy, Plug Power, Meta, GameStop. They had earnings today. Stocks down 3%. Earnings weren't the best. SoFi, Microsoft, SMCI, and Applied Digital. So those were your top 20 stocks that were traded today in the options market. And then number two, is Nancy Pelosi. Well, first of all, number 2, before I get to number 3, which is the last thing about Nancy Pelosi, politician Rob Bresnahan bought $30,000 of Robinhood on May 9th. So for the first time ever, or for the second time ever, the last time a politician bought Robinhood stock was at IPO. We got a politician to buy Robinhood since 2021. So nice to see the politicians are coming on board and they're betting on the future of finance. And that was disclosed today, May 9th. They did buy $30,000 of Robinhood, and that is a representative from Northeast Pennsylvania. All right, final update. Nancy Pelosi's current portfolio, for those that don't know, just wanted to give an update for everyone since it was updated in the past couple of weeks. NVIDIA's 20%, Google's 13%, Palo Alto's 11%, Broadcom's 10%, VST, data center play 9%, Amazon 9%, Tempest AI healthcare play 9%, CrowdStrike cybersecurity 6%, Microsoft 5%, Apple 4%, Tesla 4%. So another reason I'm pretty bullish on Google is that Nancy has 13% of her money in Google. Like, Nancy doesn't lose. So 20% of it's in NVIDIA. She sees that NVIDIA is the future. So NVIDIA, Google, Palo Alto, Broadcom, VST, Amazon, Tempest, Crowd, Microsoft, Apple, Tesla. Basically a NASDAQ type of portfolio with some cybersecurity, a lot of sort of semiconductor and exposure with Broadcom and NVIDIA, and then big tech. And then I guess the one sleeper is healthcare AI with Tempest, which has done very well since she disclosed that she bought it back in January. But overall, you know, her portfolio looks like a lot of people's portfolios. And if Nancy doesn't lose, I think the broader market, which is what most people are invested in, should do well in this AI revolution. All right, that's it for me. Thank you, everybody, for listening and watching. Thank you for watching the Daily Recap. We are back every single day with the Daily Recap Monday through Thursday. I missed it last week as I was traveling, but not going to be traveling for the next 3 weeks. And so I'll be here every single day. In the market close, I did a segment for about 40 minutes with Farzad, so I'll link that in the description for anyone who wants to watch that. We kind of broke down his bear case on Uber, his bull case on Tesla, and the dynamics between how he's thinking of the official Robotaxi that is now being launched into the world. Thank you, everybody, for listening and watching. I'll see you guys on the market open tomorrow.